Welcome, Mrs. Franks, to our video. We will be discussing two corporations that we chose, which are Nike and Under Armour. Now we will be going over a few different financial components between these two companies, including their income statements, their balance sheets, their cash flow statements, and their overall community involvement for the years 2023 and 2024. As you can see on this slide, we have Nike and Under Armour's partial income statements. An income statement reports revenues and expenses and calculates net income or net loss for the period. On the income statement for Nike, we looked at their financials for the end of May 2023, and for 2024, we looked at March. For revenues, we only reported sales revenue, which was around $51.2 billion in 2023, and in 2024, it was around $51.3 billion. Now we will be looking at the gross profit. A gross profit is a company's revenue minus the direct cost of producing goods or services. As we looked at the gross profit for Nike, it was around $22.2 billion in 2023, and for 2024, it was around $22.8 billion. Now that we were looking at what we reported for expenses for Nike, which were selling, general, and administrative expense, interest expense, and income tax expense. For the selling, general, and administrative expense, it was around $16.3 billion in 2023, and for 2024, it was around $16.5 billion. We subtracted the interest expense on the income statement since it represents the cost of borrowing money, so for 2023, it was around negative $600,000, and for 2024, it was around negative $161 million. Now we have the income tax expense. In 2023, it was around $1.1 billion, and in 2024, it was around $1 billion. Now we have to calculate all the expenses, which were $17.5 billion in 2023, and the total of expenses in 2024 was around $17.4 billion. Now we'll be looking at the net income. A net income represents the profit a company makes after deducting all expenses, including taxes and interest, from its total revenue. Nike's net income in 2023 is about $5 billion, and their net income in 2024 was around $5.7 billion. Since now we know the definition of everything that is on the income statement, we will be discussing Under Armour's income statement, which ended in March of 2023 and 2024. Their sales revenue in 2023 is around $5.9 billion, and in 2024, it was about $5.7 billion. Their gross profit is about $2.64 billion in 2023, and for 2024, it is around $2.63 billion. Now looking at their selling, general, and administrative expense in 2023, it was around $2.3 billion, and for 2024, it was around $2.4 billion. Their interest expense in 2023 is around negative $12 million, and in 2024, it was around negative $268,000. Now looking at their income tax expense in 2023, it was around $108 million, and for 2024, it was about $30 million. Now the total of all the expenses in 2023 was around $2.47 billion, and for 2024, it was about $2.43 billion. Their net income for Under Armour in 2023 is about $370 million, and in 2024, it was around $230 million. Now we are going to be moving on to the next slide.
Next, we found the total revenue for both Nike and Under Armour in 2023 and 2024. The total revenue is the total amount of money a business earns from its operations before deducting any expenses. Looking at Under Armour's revenue, there was a decline from 2024 to 2023 of $201.7 million. In 2023, they had a total of $5,903,636,000, where in 2024, they had a total of $5,701,879,000. This can be because of the high market competition Under Armour has. Nike, on the other hand, had an increase of $145 million in revenue. In 2024, Nike had a total of $51,362 million, and in 2023, they had a total of $51,217 million. This can be because of the successful marketing strategies and high demand. As a result of these totals, we found the revenue growth percentage to see how much the companies increased or decreased during these periods. To calculate this revenue growth percentage, you'll need to take the total current period minus the total previous period and then divide that by the previous period. Nike's total revenue growth percentage was 0.28%, where Under Armour's was negative 3.62%. From the income statement, we can use the time interest earned ratio to help indicate the company's ability to cover its interest expense with its operation income. The equation for this ratio is the net income plus the income tax expense plus the tax expense divided by the interest expense. For Nike in 2023, when using this equation, they got a total of negative 1,032.5. where in 2024, they had a total of negative 359.2. The negative means that Nike had a net interest income rather than an interest expense because it earns more interest than pays on its debt. Under Armour, on the other hand, the ratio in 2023 had a total of negative 36.67, where in 2024 they had a total of negative 976.8. This shows that Under Armour had a dramatic shift from 2023 to 2024. Overall, this makes Nike more financially dominant with this ratio.
This is our financial analysis of Nike's balance sheet for the years 2023 and 2024. Now let's dive into the key figures and what the balance sheet tells us about the financial health. Starting with assets, we see an increase in Nike's cash reserves being $7.44 billion in 2023 and $9.86 billion in 2024. This shows greater liquidity, which could result in cost cutting or higher revenue. Accounts receivable, or the money owed to Nike by customers, also saw an increase from $4.13 billion to $4.43 billion, suggesting higher sales on credit. However, inventories dropped from $8.45 billion to $7.52 billion. This could mean Nike is managing its stock more efficiently, reducing excess inventory. Now let's move on to the Nike liabilities and equity. Accounts receivable slightly decreased from $2.86 billion to $2.85 billion, reflecting steady supplier payment. Accrued expenses remained fairly stable at $5.72 billion. Total liabilities increased from $9.26 billion to $10.69 billion, which could indicate new debt or financial obligations. However, total stockholder equity also grew from $14 billion to $14.43 billion, a positive sign that Nike is increasing its value to shareholders. Furthermore, Nike's financial position appears strong with higher cash reserves, stable liabilities, and increasing stockholder equity, which shows resilience and growth potential for the company. This is our financial analysis of Under Armour's balance sheet for the years 2023 and 2024. Now let's dive into the company's financial performance and trends. Starting with assets, we see an increase in Under Armour's cash reserves being $7.12 billion in 2023 to $8.59 billion in 2024, reflecting improved liquidity and possibly stronger revenue management. Accounts receivable, the money owed by customers, remain fairly stable, slightly decreasing from $7.60 billion to $7.57 billion. However, inventories saw a significant jump from $1.19 billion in 2023 to $9.58 billion in 2024. This shows a major stock buildup, possibly due to increased production or lower than expected sales. Now let's take a look at liabilities and equity. Accounts payable, which represents short-term debts to suppliers, decreased significantly from $6.49 billion to $4.48 billion, indicating faster payment cycles or better supplier negotiations. Accrued expenses also decreased from $3.55 billion to $2.79 billion, which is a positive sign for financial stability. Total stockholder equity grew from $1.99 billion to $2.15 billion, which indicate an increase in company value and shareholder confidence. Moreover, Under Armour appears to be strengthening its financial position with higher cash reserves and reduced liabilities. On the other hand, the rise in inventories is something to monitor, as it could indicate either expansion plans or unsold stock buildup.
Another ratio that is helpful to analyze the two companies is the current ratio. The current ratio helps measure a company's ability to pay short-term debts. The equation for this ratio is the total assets divided by the total liabilities. For Nike, in 2023, they had a current ratio of 4.05, where in 2024, there was a slight decrease with a total of 3.6. Under Armour had a total of 1.69 in 2023, and there was a slight improvement in 2024 with 1.83. This ratio shows that Nike has a stronger current ratio, making them have a stronger financial position than Under Armour.
This is an analysis of Nike's 2024 statement of cash flows. We'll break down the key financial activities that impacted the company's cash flow this year. Let's take a look at investing activities. Nike made purchases of short-term investments amounting to $4.76 billion. However, they also sold a short-term investments worth $4.21 billion. This reflects the company's strategic approach to managing its liquid assets. Now let's move on to financing activities. Nike repurchases common stock worth $4.25 billion, a move often aimed at increasing shareholder value. The company paid out $2.16 billion in dividends to its common and preferred shareholders. This financial report gives us insight into how Nike strategically allocates its funds, whether investing in assets or returning value to shareholders. Nike continues to demonstrate financial planning in long-term growth.
Now we will be moving on to the statement of cash flows for Under Armour in 2024. They decided to have two important investing activities. For one, property and equipment, which was around $150 million. For two, sale of MyFitnessPal for $45 million. Next, we will be moving on to the financial activities, which was for one, common shares, which was around $75 million. And for two, they had employee taxes paid for shares withheld, which was around $6 million.
When choosing companies to invest in, it's important to look beyond financials. Factors such as a company's ethics and principles can impact your investment. To gain a better understanding of their principles and ethics, we will start by examining the company's commitment towards reducing their environmental impact. Nike's plan to reduce their environmental impact is to incorporate an open-loop recycling system with the objective to divert their waste from landfills by letting external companies purchase their recycled materials. Nike also implements an in-store recycling program that lets you drop off Nike items which they recycle or donate. On the other hand, Under Armour is in the process of rolling out a circular design principle system with the goal to recycle materials. They do this by incorporating biodegradable and recyclable material, with this plan already successfully in motion and on track to meet the 50% threshold by 2027. Under Armour also plans to adopt a system where they reduce their reliance on new materials, effectively reducing its environmental impact by using recyclable, renewable materials with the final objective of reducing environmental consumption. Other important factors include company transparency and community outreach. While not every detail needs to be public, companies that are more open about their policies and ethical codes carry less of a risk for unexpected legal liabilities, which can impact financial operations. If we look at community outreach, both Nike and Under Armour have great community outreach programs, offering scholarships and sponsorships for all groups of people, mainly youth groups. However, Under Armour is transparent about most of its policies. It withholds certain information from public view. For example, the company does not disclose details about gender pay gaps or parental support benefits such as parental leave. While Nike proudly displays its wide option of benefits like their fertility, surrogacy, and adoption benefits offered to employees, as well as a 100% pay equity across all employees.
Under Armour shows a decrease in revenue by 3.42%, as well as a 94% big drop in net income, and showing overproduction in products that outweighed the profit of sales. Nike, on the other hand, showed a 0.28% increase in revenue. Nike greatly increased sales revenue from 2023 to 2024 by $145 million. They greatly increased their cash by $2.42 billion and provided dividend stock buybacks to their shareholders, offering financial sustainability. After much research was conducted, we decided to choose Nike as the best choice to invest in, as it is overall the safest choice financially. It proved substantial financial growth in a strong and efficient form, as well as a stable cash flow. Nike showed a solid management overall, which leads us to say Nike would be the better company to invest in. These are the resources we used to help gather the most relevant financial information needed to make our decision of which company was the best choice for you.